Hello and welcome to Indianomics. My guest today is someone whom I think the nation really wants to hear at this point in time, the head of banking supervision at the Reserve Bank of India, Deputy Governor, Mr. Mundra. Good morning, Mr. Mundra. Thank you very much for joining me. That is the reason why I said at least India Inc. very keenly wants to hear you today. This sudden news about a near 6,000 crore of money going out of a Bank of Baroda branch. Apparently the branch usually has 45 crores remitted, and now in a short span of time 6,000 crore. Isn't it too late for an alert system?
Okay, I mean to say I would not really like to comment on the individual instance because it is still under investigations and various agencies are working on it. But having said that, I would actually would like to speak about some generic or larger issue on this. Now, if you look at this incident and to the extent what we have understood and it is reported, two things come out very clearly. One is there are cases of individual indiscretion. Okay.
Yes.
Now, indiscretion, whether it is on account of a performance pressure or it is on account of something else, time would tell. The second thing, this is one instance. There had been a couple of other instances recently reported, about some kind of transactions which are really not meeting the norms. But these cases are detected by the institution's internal system first, and then they went on reporting.
Yes.
Now, what it indicates that while there are systems are in place, but by the time you report, there is a substantial lag, and that is exactly what you are also pointing out. So, this brings us to the point that there has to be a better system of surveillance which is more real time. And incidentally, actually just say a fortnight back, I was addressing an international conference, and I did mention the very same thing, that the KYC AML, there seems to be some complacency, there has to be more alertness. Moreover, the system as it is, particularly in case of public sector banks, to expect that everything can be accomplished at the branch level would be an unrealistic expectation. So there has to be a central surveillance system which is using the technology much more efficiently and which can track the events on a real-time basis.
Okay.
Now, but there are some issues which are even larger than this. This is a specific issue. And those larger issues, if there are vacuums, either at the board level, which is required to set the direction, or at the CEO level, or the missing middle problem. If there is a gap in any of these, there can be manifestation. And if gap is cumulatively at all the three places at the same time, I think we need to think much more comprehensively on that.
Okay. Is RBI already investigating this case as well?
I think agencies are already investigating. Yes. Our people are also, we don't want to start too many parallel things, but we are keeping a close track over whatever is happening.
Have you alerted other banks, or are you starting a surveillance on other banks on account of the one discovered at BOB?
From the information which has come till now, there are obvious linkages. So I think we would need to look at the wider ramifications of this.
Yeah, we interviewed the BOB top official, and he said a lot of money, 90% came from the RTGS system from public sector banks, foreign banks, private banks and cooperative banks. So is RBI investigating?
I did see the flash coming on your channel just before I came here. Yes, there are linkages, and in the financial system, obviously the money would be flowing from one channel to the other channel, or one place or institution to other. I think we would need to look into the comprehensively on this.
Okay. What is the fear here? That bank officials are becoming complicit, or is it that bank is suffering a loss, or is it that banking system is getting used as a conduit for money laundering?
I think of course, third is the biggest fear, because that is something, the regulators around the globe are deeply concerned about it. First, what you mentioned is third is possible because of the I won't say always complacency, but I did mention that those three vacuums sometime
Was it
there
not
had been
complacency? Somebody was complicit, actually corrupt.
this is what I'm telling you know, it would be the time alone would tell. If you remember what I said in the beginning, whether it was a pressure which kind of thing or it was otherwise motive, but the very essentially there can be complacency, there can even be lack of skill set. There was a missing model, there had been acceleration, elevation of the people,
fair enough.
whether people were grounded enough to understand these kind of things. So I think there are a host of issues around it. As far as middle part, the second question which you put out of the set of three, second is immaterial.
Okay.
I mean to say whether it is a gain of 10 crore or loss of 15 crore in the whole scheme of thing, it is just immaterial.
That's a point, sir. Okay, but let me come to the bigger losses that we have to speak about, the NPL issue.
Yeah.
I have a host of questions on it. First is really, the discrepancy in recognition. SR is a good loan in some banks. It's a bad loan in, for instance, Bank of India's case, and they were forced to recognize it as bad loan. Likewise for GVK and a host of other things. How do you allow this discrepancy?
No, see, let's put in proper perspective. The regulation which we pursue at this point of time is a rule-based regulation.
Yes.
Okay, and that is the model which is in place, which we have adopted. Now, in a rule-based regulation, the classification of an account would be linked to the record of recovery.
Okay.
And is always possible that the record of recovery of the same account may differ from institution to
So he
institution.
pays one bank and doesn't pay another bank?
Could be, I mean to say. So this kind of variations can come. So till this whole, there will be pros and cons in both the approaches. So suppose we had on the other kind of say regulation, and still then there would be some cases. So always, this kind of differentiations are possible. Moreover, as we move forward, maybe a couple of years from now or 3 years from now, and as we move into the direction of new accounting standard, that will bring a third element in this whole thing. So it will remain, I mean to say, it will be something which will remain a work in progress for a while.
Okay, you're in the latest credit policy, you pointed out that you have told banks that where there is a difference of view between the supervisor and the bank in terms of asset classification, the banks have to disclose it. Now, first, when are those rules coming? Is it effective for this result season?
We are trying to put the final framework in this, but maybe there is a possibility as the coming the March 16 the account disclosure, we should be able to put the framework in place.
But why in the first place should there be a discrepancy? When the supervisor says this is wrong, it is wrong, isn't it? Your view has to prevail, doesn't it?
No. It's not telling that you don't agree with the supervisor's view, and you only, what we are trying to say, that in any situation, large account, there will be technical issues. It's quite possible that while closing the account, bank has not disclosed it or not treated it, not the disclosure, but not treated as NPA. In subsequently supervisory review, it has been found that no, it should be treated. There had been, we give the bank opportunity to present their case.
Okay.
We admit, we don't admit, but finally, if it crystallizes that no, it is an NPA, by the time you have closed the previous year's book, rather than restating the whole thing, it will come as a disclosure. So it doesn't mean that they are not required to do. They are required to do and also disclose.
Okay, all right. Well, let me come to 525. Now, let me state at the outset that I understand the reasons why RBI allowed it, and they are very honorable reasons that, you should, since banks don't have asset liability match at 25-year level, you should have a 5-year rolling, as it is the international best practice. But look at the way in which it has gotten implemented. We don't have a system-wide figure in the first place. We have SBI saying that they think the pipeline is 30,000 crores. Now, SBI is 1/4 of the banking system, so let us assume for the overall system it is 1,20,000 crore.
Of course, that will be a very simple arithmetical assumption, but
but even 1 lakh crore is not that an unusually high number. Are you happy with the way 525 is applied?
See, now as you mentioned, 520. See, larger issue, let us understand. All the regulation which we have put in place in say last say 1 year or 2 year, whether it is the whole KRILC platform or the JLF or the 525. The whole point is very clear that if there is a problem, then recognize it, don't postpone it. But if there are, productive capacity in the economy, and there are justifiable reasons that the productive capacity in the economy should not be put to jeopardy. So there is an enabling mechanism. 525 is a mechanism of that kind. Now I agree, you put any framework in place and there are always a possibility that it is not really used with the sense of responsibility which when we put the regulation we expect. But then you have to keep on putting a check and balances, and that exactly what is of a very recent vintage. I mean,
Yes.
525 has been introduced recently, but our team on a random basis and on an ongoing basis keep on picking up the cases which are being dealt under 525 and examining.
Okay.
If they are meeting the framework, they will continue. If they are not meeting the framework, we would have our usual regulatory and supervisory action.
No.
But the sum and substance, we need to give it a time. It is with a very, I would say, right intention, and it will be premature to jump to any conclusion on that.
Yeah, as you said, it can be applied in various ways. Now, to apply a 525 to the Ratnagiri Urf Dabhol plant, which is already 20 years old, looks a little strange. Will you allow it? Or for that matter, will you allow it in Bhushan, which is, clearly not a concessionaire kind of problem. It's a kind of wrong costing problem, perhaps.
No, see, these are two very different kind of things.
Yes.
One is, of course, as you said, it has been a project of very long time, and there had been concession related issues in this. So ultimately, as I said, we need to see the final framework when it comes. It is still a work in progress. There had been discussion about hiving up the two things,
Yes.
which can be very independent. Maybe one of the hived up unit would be something which can fit into the prescription of 525, while other may not qualify for it. So we will need to examine everything. On the again, not referring to any particular account, but there are sectors, and there are sectors which we know that they are long gestation sector. Now, for whatever reasons, if long gestation sectors were tried to be squeezed into a short repayment period with over optimistic projection of the global economy or global demand, then obviously those are the kind of assumption we would be prepared to give one option of course correction.
Okay.
But this option would not be a free option. This option would need all the parties concerned to bring in their share, or also share the pains if there are, and move with a much greater sense of responsibility. And we also be prepared to be dislodged if that is the option.
So, short point, you will disallow some cases.
It depends, as I said, if his case is fitting the bill and if there are merits in the case, yes. If it is not, then naturally the viewpoint would be different. It's not that because there is a scheme and kind of whosoever comes and not going to a movie theater, that if you have bought a ticket you are entitled to sit through the show. That is not the intention.
So, looks like you will disallow Bhushan. Will you disallow Ratnagiri?
As I said, I would refrain from commenting on the individual cases, but each case as it comes would be examined. That I can say very in greater details, and we would expect it to completely match with the framework which has been provided.
Okay. Mr. Mundra, we have to take a break at this note, but lots of questions more for the Deputy Governor of the Reserve Bank, particularly on issues like capitalizing of banks and the future management talent in banks. Coming for you in just a minute. Welcome back to Indianomics. We've been speaking with the Reserve Bank Deputy Governor, Mr. Mundra. Well, Mr. Mundra, let me come to the whole issue of capital. There are various numbers. The government's number has been 1,80,000 crores, which is what, at 65 rupees, 27 billion, 28 billion dollars. There are lots of brokerages which go with 40 billion dollars as required capital. Are you happy with this 27 billion calculation?
See, these calculations have been happening. I remember, couple of years back, probably the first time calculation was done by Reserve Bank of India, and the figure which was estimated was something like 2,40,000 crore, which was the figure which was mentioned. But having said, see, it will be a moving figure. I mean to say, you really cannot do a calculation, arrive at a figure and say that it is the final. Why it is a moving figure? One is how the growth itself is coming. See, if credit is growing in the system at 10%, or credit is growing in the system at 15 or 20%, it can completely change the calculation. What is the focus of banks going forward? If banks continue to finance the assets which invite the higher risk weight, say 150%, compared to the something which is 35 and 50%, and those shifts are happening.
Yes.
That will be the second determinant. The third is how your profitability is and how much you are able to retain that profit. So I think it will be a moving figure, but from whatever way you look at it, it's quite clearly that as it is, India is growing much faster than any of the peer, and with all the right focus of all the concerned, growth should only accelerate from whatever it is. So there would be a need of capital. Absolutely. The quantum may differ, and quantum will get on adjusted with each passing year, but there would be a need of capital.
No, actually my more immediate point is for the even current year, of that 1,80,000 crores over the next 4 years is split up as 1,10,000 crore from the market and 70,000 crore from the government. Even in the current year, the market contribution doesn't look like being met at all. We are 7 months into the year.
Right.
So right now, is Reserve Bank telling the government to find more capital?
Again, see, when whatever figure, I would say, even if I take 110 and 70, of course the government has said 70 is what they are mentioning now, but if there is a need, they would be prepared to, and probably they will have more fiscal space to do so. But this 110 or 70, even if we take it, it is not similarly like it is just equally divided over a four-year period, because with whatever government has provided and whatever little banks have done from the market, as far as their capital adequacy level which is required for the existing set of framework is not inadequate. Okay. It may not, see, this system level
capital adequacy, it is not inadequate. But if you, like you just repeatedly say, you want them to recognize NPLs, then it is insufficient. So maybe they are not able to comply with your rule of recognizing because the shareholder has not provided capital.
No, I don't think that our regulation gives this leeway that because you don't have the capital, so you can.
Okay, let me just rephrase the question. The point is, for the current level of required NPL recognition, capital is inadequate. Would you agree?
There would be need of. I think the banks can do with some more capital, but as I mentioned, that system level capital adequacy is much within the framework, maybe slightly better than what is prescribed under Basel III. But as we move into the next 2 years and the more Basel III norms start setting in, yes, there would be a need of capital. And that is why, again, referring to the same conference, I gave 2-3 calls to the banker. First one we have already discussed about the dealing with the asset quality problem. But second, exactly, I said be opportunistic in raising the capital. So I mean to say, it's right. You look for the right market, you look for the right price, and if there is a room available that you can wait for a while, then there is no merit in rushing and doing it today.
No, actually,
but the central message is clear.
Yes, but
capital
the previous
would be needed, and banks will have to find out the way of raising that capital.
6 months ago or even 3 months ago, RBI, in various ways, you and the credit policy statement was putting the onus on government, and government did come with more capital. Now you are not telling the government, you're only telling the banks to look for opportunistic ways. Immediately, you don't think you need to request the government also to give more capital?
As I said, both have to move together. For system capital adequacy level is there, credit growth is at a certain level, which the present level of capital for the current year, they should be able to deal with it and live with it. As we move into the next year, so new year, new agenda, new call,
Okay.
all would come.
Okay, but speaking of your own speeches, it just reminded me, you frequently quote the IMF number, which says that our stressed assets is 36% or
Yeah.
thereabouts. Since you have quoted it twice in your speeches, you think that's a number we should take very seriously?
See, I did quote those numbers, and I also put a additional sentence that while the assumptions which they are taking for arriving at this number can be questioned. It's not always that we go by those assumptions, but it reflects a trend. This is what I was mentioning, because they pick up a certain interest coverage ratio and they also pick up a stress scenario combination of three factors. You know, how the bad loan can rise, how the interest rate can rise, and how the exchange. So those are the extreme stress scenario. So that is what I have been always telling when I quoting either the IMF figure or the figures, similar figure issued by another brokerage house.
Yes.
But what I have been trying to say that you cannot say the trend cannot be completely ignored. You cannot say no, this trend is not there. The percentage may differ. I mean to say those are the kind of assumptions really may not materialize.
Okay. What is your sense, though, as both a former commercial banker and a current supervisor, that we are going to see period of greater stress? We cannot still say the system has plateaued in terms of stress?
General sense, and what the banking community is also expressing confidence looking at their individual portfolio, that it looks like that okay, at least there would be similar kind of level, if not reduced level, but incremental level may not be there. But I would say this all things would be deeply related to two major factors, and one is of course the global events. We can't say that we are completely insulated. I mean to say with the kind of and a governor also I think mentioned the other day that if we pick up how much we import and how much we export as a percentage of GDP, put together it works out almost 50% of GDP. And that being the case, you can't say that we are not somewhere related to the global system. And that being the case, there are the issue of unhedged exposure would continue to remain a matter of concern. So that will be one development. And second, of course, the internal, the various policies which are required to be put in place. Some of the resolutions where the framework at least has been conceptualized, but then the execution. So a lot would depend on that. But provided that there are no undue shocks from these two fronts, maybe I think we should see a kind of stability in that scenario.
The reason why I'm asking you is the SME2 number for one bank, one very large bank, was 2.7%. In fact, I can tell you, this is a brokerage report which said that ICICI Bank had an SME2 number of 2.7% in FY14. It rose to 5.7% in FY15. Now, what is the system level rise? This is a huge rise, over double. Is the system level stress risen doubly at the SMA2 level?
I did see your interview on that, and I think you extracted the comment on that percentage also from the bank itself. So you know, why do you want me to comment on that?
No, I want to ask you, in the system level, has there been a doubling of SMA2? System
level, you know, year end is March quarter is always stand out little different from the other quarters. So there are fluctuations, but it's not that there is a complete different trend which is obtaining.
Okay, but why don't you all disclose the SMA2 numbers at some regularity? So then the investors are not overly scared.
Yeah, but you know, we have been examining this data, and we found that there is still room for the refining the data and the more robustness in the information. So while I appreciate that it is important to bring the disclosure, but at the same time to bring the disclosure till we are completely convinced, and that is something which we are already working on it. Our team is working on it. So I think that readiness or that stage should come. Then we'll look into it.
Okay, no, because we used to get CDR numbers. So that way, this is actually we are going behind in terms of disclosure if SMA2 is not revealed, isn't it?
CDR and SMA, you will also agree, these are two very different things.
Okay, but we should expect that you will disclose SMA2.
Yeah, we are working on that framework.
Okay, so speaking of disclosures, actually, should you not be telling the banks also to give us more data on the 525? Disclosure should be mandatory, isn't it? How much is done and how much is going to be done?
See, we always tell them what they need to tell us, and if you know, and we also have the means to find out even if this is not given. But to tell them what you know they should disclose to the world at large, barring whatever is required under the legal framework, whatever is required under the accounting framework. To that extent, it is all right. Beyond that, I think they are all responsible institutions. They are board-driven institutions, and wise people sit on the board.
Yeah, but 525 is so much like the former restructuring. They used to give us some numbers on restructuring, but 525 is still very discretionary. Other than SBI, nobody really gave us much data.
As I mentioned, this is of a very recent vintage, and this is something which we are also observing. So have some patience.
Okay. Well, let me come to some more individual cases. We have to take a break, but we are back with a few more instances of prompt corrective action, which the Reserve Bank has announced. Some more from the supervisor on that. We're back in a minute. Welcome back to Indianomics. We've been speaking with the Reserve Bank Deputy Governor, Mr. Mundra. Mr. Mundra, you all announced a prompt corrective action of Indian Overseas Bank. What triggered it?
I think the whole PCA framework is very much in public domain.
Yes.
And there are.
I'll tell you what, the triggers that you all gave are 10% in net NPL, which the bank has not reached. Or has it? Was that the trigger? The ROA of 0.25% was triggered 2 quarters ago, but you all didn't do it at that time. I am unable to find out what was the immediate trigger.
No. See, I mean to say, you don't look any of these trigger on a quarterly basis.
Okay.
You is again, see, is a very responsible act, and it is also act which is meant to bring the serious outcome. So, you know, you would also appreciate that it cannot be on a quarterly basis this kind of triggers come, but when the trend is consistently in that direction, that is where you bring it. And you know, this is not something which is invoked every other day, but at the same time there was another instance. So they were taken into PCA. They have also released, now they have been released from the PCA. So this is how this
okay, but I mean, in IOB's case, for instance, there were a couple of quarters of loss reported. So it was staring in the face. Should you advance your corrective action triggers?
See, understand one thing. One is, of course, the formal PCA comes into the motion and conveyed, but it doesn't mean that before that till yesterday there was no attention onto what is. So it is always there.
So are you fearing that a couple of other banks also are coming into PCA?
I think if this kind of you know message is there, so it also serves as a purpose for bringing the other bank to. So even, you know, without asking the school teacher is not asking someone to kneel down and they get their answers.
All right. Hopefully it will be an example. Mr. Mundra, you know, this is a separate instance. You know, the Kingfisher case has been going on and on. But now, you know, there are increasing reports that loans were given without proper diligence, almost amounting to a fraud. Now, doesn't it worry you? Is RBI separately investigating the way in which so many banks gave loans to Kingfisher without following the rules?
Actually, I am not very fond of subscribing to very sweeping statements.
Okay, did I make one?
No, I mean to say, whether the loans were given without due diligence, again, see, there is a larger question, and I think I did mention to you sometime in past also. There is a life and history of every account, and it maybe account start with a right account, everything is right. At what point of time a strong account becomes weak, and then again at what time time of point a weak account start assuming the fraudulent trajectory. These all depends on the flow of the events, and maybe how the promoters or everyone is get influenced. But whenever something happens like this, our general impulse is to treat everything ab initio.
Yes.
Now there are accounts with the history of 30 years, 40 years, and to believe that someone has been perpetrating a fraud on the system for 30, 40 years
That's so true.
so I think these are the kind of finer points that at what point of time a business model went wrong, whether it was a very adventurous business model, over optimistic business model. But when that happened, and then some point of time the intention also started changing. Now the question is that the financiers who entered before the change of intention and financiers who entered after the change of intention, I think all these things are need to be looked into with those kind of sensitivity.
Okay. Well, fair point. I guess there's a lot of judgment involved. Let me come to the base rate issue. Banks are, I believe, trying a lot to tell the supervisor not to impose the marginal costing. Are you convinced of their arguments?
See, we never gag the banks, so they are very free to express their, what they feel about it. Rather, we invite it. Yes, there had been various viewpoints which are coming from the banks. We are accumulating all those things, and I can only assure you, yes, we would be very critically and very fairly looking at all those things which they have mentioned, and only then a final framework would be evolved.
Are you firm on marginal costing though as an input into base rate?
Looks like is a direction where we should move. As I said, the modalities and the fine print can always vary, but we would look into all the arguments.
What modality can vary? If the marginal cost changes in the previous quarter, the base rate changes in this quarter. What more modality difference can there be?
There are kind of input where the people have made some suggestion, and as we say that when we put something on discussion paper, our team has worked quite hard, and I think they try to put a very robust framework. But going by the past experience, there is always something incremental which can come. So we never start with a belief that whatever we have said is the last word, and we would not be open to the ideas. And if that is the feeling, then there is no point in putting a consultation paper.
No, is it the last word that it will become applicable as of March?
As I said, we will after getting all the inputs and the concerned departments, and would look into it. So it would be difficult for me to really make a very definitive statement about this at this point of time.
Okay, so it may be extended beyond April.
No, I am not telling this way. I won't be able to make a definitive statement.
Okay. Well, let me just get a couple of things on the power discom issue as well. We understand that the government is asking the state governments to take over the accumulated losses of some of the discoms. I think 4 of them have been mentioned. Are you okay with this kind of an arrangement? If the banks were asked to take some part, what will the Reserve Bank stand be?
Of course, I understand that it is a matter of ongoing discussion between the government and some of the banks also, and I don't think that it is a concluded discussion. So really on the final outcome is still not known, and it will not be fair to comment on that. But essentially what we have conveyed in very clear terms, that if banks were to consider another kind of restructuring any such thing, it is their individual commercial judgment, but we won't be able to grant any forbearance for this. This is a very clear message which has been conveyed by Reserve Bank of India. There are also the problem in DISCOM is a problem of flow and problem with stock. You have to deal with the problem of stock in one manner, but also ensure that the problem of flow is addressed. So that will bring the related issues of two issues mainly. One is about the transmission efficiency and other is about the tariff. And I think all these things have to go together. That will be a comprehensive package.
No, one argument by one of the DISCOMs was, Rajasthan DISCOM for instance, is that although the mechanism was put in place in 2013, by the time they could render it effective, 1 year had elapsed. And so in all fairness, the banks should fund the losses for 1 more year. Fair argument?
I won't be, I would not like to comment on these issues, but what, again we come back, if you look at this larger issue, whether it was a 1 year delay, okay, just for the sake, I am not telling we are going to do it, say for the argument it is delayed by 1 year, okay, does it address the basic issue? It doesn't address the basic issue. So going back to what I mentioned a little while back in the context of banks, it is in the context of everyone. If there is a problem, don't postpone it. Better address it today.
Okay.
If you postpone it, problem will only slightly increase rather than you can't wish it away.
Okay, so just final question on IDBI Bank. The government has declared its intention that it will convert its holding into probably in some sense indirect and thereby bring down its direct holding. Is this likely to be done for the other PSU banks?
But how I am qualified to reply to this?
No, my sense is that even the IDBI advice would have come to you. Either it could have originated from you or it could have definitely come to you for advice. So as regulator, you're...
No, I mean to say, if say for any entity, if owner is contemplating some of the things, owner is not required to come to regulator for thinking. We can't control we can't regulate the thinking.
Okay.
But what we need to do is to regulate the action.
Yes.
So I think when we come to that stage, yes.
But you think that that is the way you see things going?
Largely, as I see, I mean to say on a more serious note, but largely as I see, I think from the viewpoint of legislative passage, it would be easier because the institution is governed by a separate law, whereas for the larger group, I think it will need some more effort.
But the procedure will be to set up a holding company and move all the PSU bank holdings into that company. That would be the procedure.
No, modalities can be different. Means there can be an umbrella holding company for the sector, or to begin with, there can be a holding company at the bank level. Okay. I think all those possibilities.
You see it happening very soon. These kinds of restructuring of PSU banks, so that there is more.
No, what I see when it is how soon are going to happen will be just a kind of a guesswork, which I would not like to get into.
Okay.
But what I clearly see that this is a matter which is receiving serious attention, and I think the concerned people are working on it.
Okay.
So that is quite visible.
Mr. Mundra, we have to take a break at this note, but lots of questions more for the Deputy Governor of the Reserve Bank coming for you in just a minute. Welcome back to this special edition of Indianomics. We've been speaking with the Deputy Governor of the Reserve Bank of India, Mr. Mundra. Mr. Mundra, the financial inclusion part. Now, the Reserve Bank has done its bit by giving 21 licenses between payment banks and small banks. Let me come to the payment banks itself. How do you see it operating? Do you see the operators sharing the networks? Because I thought I heard some statement like that from the governor.
That would be the ideal things. Even with the present BC network, the banking correspondent network, the ultimate focus is the interoperability. Yeah. So I think that will be the way forward. But having said that, that will be only a small piece in the whole framework of financial inclusion which we are talking about. Payment bank start becoming interoperable, whether by sharing the network or any other medium. That is for the
But
technology.
no, we
Greeks
thought the
to-
telecom guys get an advantage. Now, if it is mandatorily to be shared, then it kinds of puts business plans in a tizzy.
I think we are trying to Christian a child even before it is born.
Okay.
So let's wait for that point of time. But then as I said, financial inclusion will be a much larger framework than what payment banks are going to do.
What is your sense that we are in 18 months down the line, or even 12 months down the line, we are going to see a very different game of financial inclusion? Government has done its bit with Jan Dhan, and banks are going to lay networks to it. Are we going to see a dramatic difference in inclusion?
It is. In fact, I am to say what RBI had been doing for last 2-3 years, it was putting a groundwork in place. Then the Jan Dhan gave a further fillip to it. Everything has been accelerated. Most of the household in the country are carrying an account. But that's just a beginning of it. I think now a large body of work is before us. And keeping that in view, you must have seen that we have put a committee on this, Deepak Mohanty committee,
Yes.
which is essentially to actually look at a medium to long term now financial inclusion plan, what to do. See, my sense is you already have a number of players who are in the arena of financial inclusion. You have equally large number of players who are already there, but they are not in the arena of financial inclusion. And top of that, you will have another set of people who are coming. So I would say it, and I have been when I interacted with the committee members, I said the same thing, that now we should start thinking that all these players, we have to create a framework that all they are brought into the this game of financial inclusion.
Yes, actually, how do you see that happening? My sense was that actually, will not some mid-cap banks actually become endangered species if a large part of their cash and their transaction fees is taken away by the payment banks?
Of course, the mid-sized bank which you are talking about, as it is, my sense is majority of them are not earning much on the fees or this kind of services. But very rightly, I think they will have to find out their niche. Everyone really can't be everything and remain a poor replica of a universal bank doing all the things at the same time would not really work. They will have to find out their niche going forward, whether it is by geography or by activity.
You expect casualties? I mean, some people to...
Casualties I won't expect.
No, when I say casualties, I don't mean that there'll be a run on the bank. What I mean is, not finding your revenues coming down so drastically that you're an open candidate for consolidation.
There would be serious competition, and if history is past is any guide for the future, then probably this kind of shocks had been good for the system, that people have reinvented themselves. Okay. But this will be essentially required, and my sense is some of the established institutions can be at one layer. All said and done, they don't have the last mile connectivity even now, but there are institutions which are already in last mile connectivity. If some way this can be synergized, that someone is doing a role to up to a particular level, then leave it to the people who are better adept at last mile, it will work out well. One more thing.
Can you just elaborate on that? So what are you're expecting that that the payment banks will become BCs for universal banks?
It's not only the payment bank. See, payment
banks.
Payment bank. If you look at the model, payment bank can't extend the credit. Payment banks
cannot. But I guess they will tie up with an NBFC.
And then we come back to that whole old debate that whether the financial inclusion should be deposit led, liability led, or it should be credit led. But my sense is it has to be a combination of both, and given the environment in which we are living as a country, credit would have a role. So that is why they should.
I know for a fact that most of the payment banks are tying up with either in-house NBFCs or with some other institutions, and they are going to offer credit in some fashion.
Who?
The payment banks.
Payment bank won't be able to offer.
No. As a, I mean, their own
They
NBFC
can,
or
they can.
joint
But
venture
that
partner.
exactly I am trying to say that is why it is very important. If there are too few players is a problem, too many players are a problem. So that we have to create a coherence. Why? See, while the say inadequacy of credit is a problem, the abundance of credit is also a problem. So the people who are coming to the formal financial sector for the first time, and if there is a overzealous lender all over and the individuals become over indebtedness, that itself is a problem. Coupled with the, see, if you are having a credit bureau for everyone as you are envisaging, and everyone has a credit history, and then one gets over indebted and then defaults, then your lifetime credit history becomes a problem. So I think there are a lot of sensitivities.
But does the regulator have the bandwidth for this? I mean, in the first place, for regulating so many small banks and payment banks, what about your own bandwidth?
I don't think that in any family parents can say that now we have brought the children on earth and now we won't be able to sustain them.
But are you all building up?
We are conscious of that, and naturally it will have to be. It will have to be. Of course, the technology is getting more and more efficient, so that becomes a big help. But you would agree there is no other, I want to say, choice. You can't say that.
But 3 years down the line, or why 3 years, sir? Even by end of next calendar year, do you think consolidation would have already begun?
No,
because as you said, you cannot have too many players as well.
No, I said if there are too many players,
and
they all cannot end up doing the same kind of thing. They will have to find their strength, they will have to find their niche, and then see that they fit efficiently into a larger picture. So as a regulator, our effort would be that we kind of provide a idea of what that large picture can be and where people can find their niche. That will be the thing.
Thank you very much, Mr. Mundra. We live in interesting times, and let us hope that inclusion is going to finally be a reality and not just a vision.
Yes, we certainly live in interesting
times. Thank you, sir.
Thank you.